economic, you know what it is, a big deal? The economic news this morning. The economy contracting just 1% in the second quarter. And our next guest has no doubt that recovery, full recovery, is around the corner. Here with more is Randy Waterfield, the co-CEO at the Waterfield Group. Randy, good of you to be here.
Thanks, Tiggy.
If you see recovery, then do we need more incentives? Do we need a bigger Cash for Clunkers program? Do we need more incentives for people to go out and buy homes here?
Well, I think we're certainly not out of the woods yet. We saw some favorable GDP numbers here in the second quarter. The first quarter was a disaster at a 6% annualized decline, at least in terms of run rate. So we're certainly not out of the woods yet. But I think, again, we're seeing the green shoots and we're on the road to recovery. And in terms of consumer banking behavior and so forth, we see some positive indicators.
Well, listen, I'm looking here at a BNP Paribas note this morning saying we expect a modest GDP print, or the consumer will eke out small gains in the second half of 2002, and we continue to look for growth to move into more modest positive territory in the second half of 2009 overall. Do you believe that we will get a positive GDP number in the second half of 2009?
I do, and the reason is we've had some catastrophic declines in autos, in housing, and so forth, and those areas of the economy make up just a huge component of GDP. Housing alone in the first quarter was down 39%. If you have some kind of cessation or slight improvement in housing, that adds approximately a point to GDP. So I think it's actually a statistical fact that as soon as you have improvement in those major areas of the economy, we'll see positive GDP growth.
So let's say you upped and expanded the tax credit for home buyers to everybody, make it $15,000, for example. But if you have high sustained unemployment at 9.5% to 10% for some time, and job losses are continuing worry, would that really do anything?
Well, coming out of the recession and positive GDP growth certainly doesn't mean there's still not a lot of pain for the consumer. We're going to have high unemployment for some time. And certainly the bottom of a recession, which is what we're in now, is very painful. You have a lot of joblessness, you have bankruptcies and so forth.
You have a lot of underemployment too. People that are part-time that want to be full-time that are not on the jobless rolls, but not making nearly as much as maybe they did or they would like to based on their career history.
Right, and that's a great point. Just because the unemployment numbers are 10%, I think the shadow number and so forth of people actually not working is much, much higher. So certainly the pain for the consumer is going to continue for some time. But I do think the first step, of course, is positive GDP growth. And I do think that we're seeing signs that will improve towards the second half of the year. The next step then, of course, is improvement in jobs and employment.
Randy, but you've already moved on to worrying about inflation. How could you worry about inflation when employment costs rose just 1.8% in the last quarter? That's a record low. How can you worry about inflation when there's no wage gains, essentially?
Yeah, sure. I think it depends on if you're talking about the economy, you're talking about the consumer, or you're talking about the stock market and investment. The markets and so forth, of course, anticipate and are leading indicators of what happens in the economy. So I think most folks are of course, and rightly so, focused on what's happening with gross domestic product. From a personal investment standpoint, I think about, well, what's the next stage and what should we
because the 40% run in the S&P is probably already the expectation of a second half positive GDP print, and a lot of people that are waiting to get into the market are probably going to be disappointed if they wait for those numbers.
Right, exactly. And so when is the time to best protect yourself from inflation? It's now when the focus is on something else.
Randy, thank you. Randy Waterfield of the Waterfield Group. Good to see you.